What is going on, investors? Hopefully, guys are doing well out there. Big tech earnings rolling right along, and we got one of the biggest. Google, otherwise known as Alphabet, reported their Q3 earnings after the bell. We'll get into them. We'll take a look at the revenue, the profits. The stock is selling off in the after hours. We're going to be likely putting up a large red candle on the chart of Google. What does this mean for the uptrend that we've been in really since the beginning of the year? Is the trend broken? Are you going to have some great buy the dip opportunities for Google? Should you step in and do it right away? We'll talk about all those things here in a moment, but we have those Q3 numbers cross from Google. We have to keep in mind, over the last year, shares of the company are up over 35%, and year to date up a whopping 55% for a company worth over $1.7 trillion. That is a massive move. Now, we are seeing during the regular trade up about 1.7%. After hours, you're down about 5%. Revenue coming in at $76.8 billion. That was 11% growth. That's an important number. We'll get to that here in a moment. They beat on both the top and the bottom line, but where they disappointed was in Google Cloud. Revenues were expected, I think, at about $8.6 billion. You came in at a number closer to 8.4. I am seeing in the after hours, you're seeing Amazon rally. You're also seeing Microsoft rally on their own results, which we'll get to a video here in a moment later today. But what I've been hearing out there, I was just in San Francisco this last weekend. What I'm hearing is Amazon is being ultra aggressive on the pricing. So you're getting price concessions. You're getting massive amount of price breaks there. And so I think what Amazon is doing is they're holding on to their customers. I think Amazon's going to print a pretty decent cloud number when they report their earnings, I think in just a day or two. But what I think is going to come under pressure there is likely profits. Also, Google more heavily invested in their own graphics processing units, otherwise known as their tensor processing units, less heavy on the NVIDIA side, where Microsoft has an advantage, having a relationship going back many decades with NVIDIA. They are capturing customers as it relates to that. Now, revenue coming in at 11%. That's important because when you look at Wall Street's estimates for Google for the next, really the next 2 years, you want to stretch it out even into 2026, Wall Street's expecting kind of a very low double-digit grower. So the fact that the company was able to do it in this environment, putting up that 11% growth, kind of a reacceleration, if you will. Wall Street was only expecting 9.6% growth, so strong results from Google. Into the segment results, you have your Google services. This is really your advertising business, coming in at close to $68 billion and just wildly profitable, nearly $24 billion in profits. And folks, this is not for the last 10 years. This is not even for the last 9 months. This is for a 3-month period. The company puts up $68 billion in revenue and nearly $24 billion in profits. And it is still the primary driver for this company. Now, they still have Google Cloud. It went from $6.9 billion up to about $8.4 billion in revenue. Again, they disappointed on that revenue side by a couple $100 million. We have spun positive in terms of operating income for Google Cloud. Last year, you lost money. This year, you made $266 million. $266 million is a heck of a lot of money. And if somebody wants to drop it on the table over here at the Investor Channel, I'd be pretty damn excited. But for Google, a company that makes nearly $24 billion in operating income, not revenue, income from their advertising business, $266 million is nothing. It's barely a rounding error. And so obviously they have a lot more growth here to come in cloud, and their own cloud business supports their own services. So they don't necessarily need this to turn into a multi-billion-dollar business, maybe like an Amazon or like a Microsoft, but it's still growing. But again, the profits are still a ways off. The company loses money everywhere else, and they generated $21 billion of income from operations. That's the same chart, although we do see YouTube ads, something we've talked about here on the channel. You've had YouTube ads fall off in previous quarters. This quarter, you saw a reacceleration. That's north of 10% growth there. Google Network, this is your AdSense sites. These are just your mom and pop websites, if you will. You're actually seeing a decline there. Doesn't surprise me considering all the changes Google has made to that business and some of the ad formats. A lot of the ad formats they actually got away with were converting very well. And look, there's probably just a general overall decline in kind of website and blog traffic as you have ChatGPT, you have social media, those types of things, maybe less monetizable assets out there. Now, I'm going to flow back up to the balance sheet over at Google, which you can imagine as they print nearly $25 billion of operating income every quarter. This is a company with north of $119 billion worth of just straight cash. At the beginning of the year, they had about $113 billion. They're ticking down their debt. But I tell you what, when you have $120 billion in cash, you pretty much drop the mic. There's not a lot else to see on the balance sheet, to be honest with you. Now, revenues, and this is company-wide. This is Google Cloud, YouTube, and their ad business all combined, coming in at that $76.7 billion. Last year, we were at $69 billion. Again, that was just a shade over 11% growth year over year. What this company's done a very nice job of year over year is the fact that their cost of revenues, their R&D expense, their marketing expense actually went down. General administrative ticked up just slightly. Your total costs and expenses went from $52 billion up to just $55 billion. So when you bolted on about $7 billion to that top line, just south of that actually, but you didn't bolt on a ton to your operating expenses, your income from operation is going to go up from $17 billion up to about $21.4 billion net income, coming just south of $20 billion. Now, the company is reducing two different things over at the company. First of all, it's the number of employees. Look at last year, you had 186,000 and some change. This year, you're down to about 182,000 employees. So they've let some of them go. They've probably let some groups just kind of churn off. And the other thing that you're reducing at Google, which we'll see when we get to cash flows, is the number of shares outstanding. So you're reducing expenses, not really reducing expenses, but keeping them in line. You're growing those revenues. Financially, things look really good over at Google. Cash flows are just going to be absolutely sensational. Your net income coming in at $19.7 billion. Your stock-based compensation expenses at about $5.7 billion. That gets added back in. Your depreciation as well. You get a total of $30 billion of operating cash flow in a quarter. We're not talking about a whole year or in 10 years. In a quarter, you put up $30 billion in operating cash flow. So when you're seeing all the doom and gloom stuff out there, now there's a lot of bad macro stuff out there and the interest rates and this, that, and the other. Just remember what you're investing in when you buy individual stocks. You're buying growth, you're buying profits, and you're buying cash flow. And right now, Google is producing all of those. So they have over $30 billion to play with. They spend about $8 billion on property, plant, and equipment. They swap back some marketable securities. That's really nothing. They're rebuying over $15 billion worth of the stock in a quarter. Again, most companies have $15 billion buybacks for like the next 5 years. This company is doing that in a quarter, and it's just half. It's just half of their operating cash flows for a quarter. This isn't even Google's best quarter, okay? We're in the midst of their best quarter in terms of revenue as holiday ad buying tends to tick up. It just doesn't get a whole lot better than these financials. Now, Wall Street's rejecting it in part because, again, you were on this 55% rally year to date. The stocks just had a great run. If you make that big red candle, well, the steep uptrend you were on is over, but what could end up materializing is a flattening of this uptrend. You have some strong area of support for the stock. We'll change this to kind of a purple line right in this range. I would say down to about 125 on shares of Google, up to about where shares are in the after hours at about 130. You would like to see some support for Google at that range. If you materially break below that, that's definitely forms a topping pattern, very similar to what you saw back in January of 2022. You get a topping pattern, not that you would have that steep of a downdraft, but you break support at about 125, really 128, where the stock is right now. You're probably retesting areas lower at about 115, 116. If you're existing shareholders of Google that are not particularly overweight the shares, want to add to a position, that's probably where I would look, is south of, we'll say, about 120 on this one. a further move down, this is what happens when you go on these massive rallies. On the way back down, you are going to have levels of support. You're hitting one now. Maybe next week, if the momentum continues down, you'll hit another one, and then much, much lower, you're at about $105 per share. That's when you hit kind of that reverse button in your Model Y, and you open up the trunk and you back it up. Because everything seems to be in place for this company. They've reaccelerated this revenue growth. They're right-sizing the employee base. Their expenses have gotten under control. They're just generating lots of cash flow. It's a relatively boring business, quite frankly, but you've got the tailwind of new AI products and a lot of products coming down the pike. Likely as we head into next year, this company will be rolling out a lot of new products and services. And I think their search engine, while many feel that is under pressure or facing competition, I think AI is actually only going to make Google search more profitable than ever. But for now, investors are selling Google, and I think it creates opportunities as we pull into these demand zones. Hopefully you guys enjoyed today's video. Be back, obviously, with more major tech earnings later this week. Good luck with your investments.